Okay, we're now live.
Excellent. Excellent. Gentlemen, I thank you so much. Hello, everybody. This is Pat Walker at MissionWinners. Many of you say, yeah, we know that. Anyway, welcome. I thank you for your commitment to doing this. While everybody else is out horsing around on a holiday shortened, time, you're getting better. And that's what'll separate you from other people. I can't stress that enough. The ones who really work hard and work smart and demonstrate initiative, which is one of my favorite words, are the people that get ahead. And you're doing that today. Your commitment showing. So I thank you for being here. And again, this is Pat Walker at MissionWinners. I'm going to share some things with you that will help you. For those that don't know, and I think this history is important, all right? For years, I taught on the university level. I taught advanced level classes. One of my finals was 24 pages typed. And it wasn't because I was a jerk. It was because I strive to be very thorough in what I did and what I do, which is a big reason why we started MissionWinners. Another very important variable, years ago, I was a scout leader. If you were getting your Eagle Scout in West St. Louis County, the last person you saw was me. And you can say, what does that have to do with investing? Everything. Why? Because the Boy Scout motto, be prepared. I'm serious. Be prepared. And what we do at MissionWinners and what we teach helps you be prepared, which is what I want. This can be a very difficult business. When I started this business in 1986, there was no internet. I drew charts. I had to go to the library and grab a Wall Street Journal because there was no Investors Daily back then and draw charts by hand. I was that committed to it. Now you can say, man, that's kind of a pain. Actually, it was a blessing, and here's why. By drawing charts by hand, you really understand the movement of price bars and volume bars in a chart. Here's the best part. You don't have to do that anymore. And you're going, thank heaven. That's correct. By the analysis that we present every day at MissionWinners, and we do it all day, every day. Well, not all day. Probably about 7 hours, though, we're doing it. We're showing people what to look for in the charts. Now, as I stated, one of my degrees is in psychology, and this is really important for all of you, all right? Charts are a reflection of human emotions. And this isn't corny stuff. This is the real world. Charts are a reflection of human emotions and therefore human decision making. In charts, you can see price and volume, right? And price action backed and combined with volume action is a reflection of human emotions and decision making, right? It's just common sense. So what are we looking for? Well, I've got a chart up here right now on TNK, all right? TK tankers. This is a fact for us that will help you. And again, this is stuff that Bill O'Neill talked about too. Wide and loose chart patterns. You don't want wide and loose chart patterns. Wide and loose chart patterns indicate high investor emotions. We don't want that. We want a degree of quiet, solitude, simplicity. I'm showing you TNK. It's just going sideways here. It's not wild and crazy. It's just going sideways. And this is another very important fact. And by the way, again, I say, I taught this at the IBD meetups for 12 years. And if I was really off base, they would have yanked me off the stage and said, you can't talk about that. That doesn't work. So this is relevant. It's going sideways. It rallies up on good volume right here. Again, price and volume. It rallies up and then it pulls back and volume drops off. What does that tell us? Folks, this is an exercise in psychology, investor psychology. Hope it's going up. It's going to break out. Well, it kind of backed off. And then it gets really quiet. And what does the chart tell us? I love this part. The charts are a reflection, as I said, of human emotions. And right here, this is called a little tug of war. It's just going back and forth. It's a tug of war between who? The buyers and the sellers. Okay? This is huge. And then finally, it goes sideways and it finally pushes through clean and simple tops that everybody can see. A fifth grader could draw this. Probably a third grader. It goes sideways and look at the volume pickup on this bar right there. On this bar, the stock did 408,000 shares. On this bar, 622,000 shares, a 50% increase in volume versus the previous bar. They voted. I'll say it again. People talk with their mouths and vote with their pocketbooks. We go where they're voting, and it really helps us. And then you get the lift. Now, here's the other reason why I love clean and simple bases. You could say, well, Pat, does it work every time? Nothing works every time, folks. That's why great investors have plans. Bill O'Neill has a plan, had a plan. What was it? And again, he changed my life. I'm grateful to have met him a couple of times. I actually sat down at lunch with him once. He was a kind soul. He truly was. It's good above the line and bad below. That is why Bill O'Neill has a policy, or had a policy when he was alive, limit losses at 6 to 7%. Limit losses. We limit losses. You can say, oh, we can't talk about losses. No, we need to talk about losses because it's part of investing. Losses will happen. But now picture this. I circle back to it. Why do we love clean and simple bases? It's really easy, folks. Price is good above the line and bad below. The best stocks you will find, and I could show you probably 500 past key list winners over the last 6 years. All of them have one thing in common. Well, they all have this in common. Clean and simple bases, a couple of things in common. Clean and simple basing patterns, doesn't need to be a cup and a handle, just clean and simple basing patterns. And when it pushes through the line, there's good volume coming into it. Again, people talk with their mouths and vote with their pocketbooks. It does this. So we can say, okay, well, Pat, this is kind of neat. I've got this technical things down, okay? And I'll back up here because sometimes, people can say things and you go, God, I don't really know what he means. And that's maddening. I had an advanced statistics class. The professor wouldn't answer a couple of my questions. I quit the class. I'm like, hey, you can't give me the time? I'm gone. So we answer questions in Mission Winners all day, every day. Why? Because it's you and you're important. And even more importantly that, hey, it's your money. We want to do good things. It goes sideways right here. And look at the volume pickup on this bar. They voted. And you get the lift. That's what we're after. Okay. It does not need to be a massive explosion in volume, but you would like to see a good pickup in volume. And you get it right there. And folks, that's a good run right there. It's clean and simple. By the way, leading stocks and leading groups, focus on those and narrow and eliminate all the other oddball stuff. Many people think, well, we're professionals. We probably look at, thousands of charts every day. Oh, yeah, you do that, we'll go blind. Okay. No, if we narrow our focus, if we know from a statistical perspective, and again, that's my background. If you know from a statistical perspective that the vast majority of stocks that make good moves, okay, this is a good move, folks, make good moves, have either great earnings and are great sales, and they're in leading groups. So I'm going to share something with you. We'll slide this in, and Owen and Rich, you can tell me, does that come into the window? Can you all see that?
Yes, we can.
That's sweet. You guys just made my day. There is a brochure booklet that O'Neill and Company put out years ago called 40 Great Stock Market Winners. I don't know if you can buy it anywhere. Track it down, 40 Great Stock Market Winners. I've studied this for years. I taught this for years. And this is research from O'Neill and Company. These were stocks that made massive moves. Well, I'm up 10% in 6 months. I don't do this for 10% for 6 months. I want more. You want more, right? So here we go. 40 Great Stock Market Winners. 87% of these stocks had earnings of 30% or higher before they broke out, prior to their moves, before they broke out. 87%. Folks, basically, I'm saying this. Almost 9 out of 10, that's a number you can use, folks. You could go to the casino with odds of 9 out of 10. I encourage you don't go to casinos, okay? I also will tell you this. A lot of people will say, oh, I'll take a gamble on that stock. We don't gamble, all right? We want to invest in the absolute best of the best, all right? That's why we have at Mission Winners the strategies and the tactics and the disciplines that we do. And it's what I teach every day. It's what I've done for years. I had to. I'll just back up here and share this with you. For those that don't know, you say, Pal, what's a little bit of your background? Okay. Mom and a dad. My dad died when I was in my 20s. It was the worst day of my life. In fact, it was Thanksgiving Day that I found out he was dying, and I was 2,000 miles from home. It was a god-awful experience, okay? Mom and dad and a brother. Later on, went to college, went to graduate school, had a scholarship, got involved in this, taught for several years, university classes, got involved in the investments field, and had to find ways to make money. My dad was dead. My mom gave me money to invest. She's a widow. I had to find a methodology. I had to. I couldn't lose my mom's money. And there was also helping to support my family off of it too. Find a way to make money, consistently make money. And again, that's the biggest reason we started Mission Winners, is to speed up the learning curve and show you what to look for fundamentally and show you what to look for technically and turn off the noise. So here's some foundations from you. And this is from the wizard, Bill O'Neill. 87% of these stocks had earnings up 30% or higher. Folks, round it. 9 out of 10 of stocks that made huge moves, 9 out of 10 had earnings up 30% or higher. 9 out of 10. Hey, you can use that edge to find and make money, to find winners. 9 out of 10. Down here, 86% of them had sales up 30% or higher prior to their moves, prior to their breakout. 86%. Basically, you could round up. 9 out of 10 had sales up 30% or higher. 9 out of 10. You can go to the casinos with odds like that. That 9 out of 10, this is going to work. I encourage you not to go to the casinos either, okay? We don't want to do that. We use this at Mission Winners in our foundations. And again, these are the things I taught at the IBD meetups. These are the things I taught at Mission Winners for years. And I love it. I love helping people. So you can take these two foundations right here and say, you know what I'm going to do? By gum, I'm going to stick with stocks that got either great earnings or great sales. Good for you. Now you've narrowed the universe down. Let's take it a step further, though. You'll love this. This is huge right here. This is research from O'Neill and Company right here. The top 5% of all stocks, okay? I'll read this to you, and I don't read to insult you, but just to clarify and drive home the point for you. Stock market history shows that the best stocks to watch often have a 95 or higher composite rating in the early stages of a big price move. Okay, 95 or higher. That's huge. Now, what do I have on all my screens? I have a composite rating of 90 or higher. I've done years of research on this, years. And again, you know my background. I had to get this right. I was the sole support of a family of 6, with 4 kids in private Christian schools at the same time, and a stay-at-home wife, working, taking care of the family too, okay? I didn't have a choice. I had to get this right. And again, managing my mom's money also. And my dad was dead, like I said. Composite rating right here. What can we do with this? Take it up here. What do we use? The best stocks have a composite rating of 95 or higher. I'll whittle it down a little bit. I'll open it up just a little bit. All my screens have a composite rating of 90 or higher. Now, that's what I've used for years. You can see you might miss something. Okay, I can live with it. But from a statistical perspective, I know that I'm going to find winners. I can live with that, ones that really move. Isn't that what you're after? I bought a stock at $20 a share, and it went up to 22 in 6 months. I made 10%. I don't want to do that. I want to make more money faster with an edge and safety. So we use these foundations to help us. So there's point 1. We're going to slide this out. And then you've got great earnings right? Great earnings and great sales and a high composite rating. I just gave you a recipe for a great cake right there, folks. But I'm going to take it a step further. You'll like this. Let me drag it in here. Hold on. I can find the slide. Here we go. I'm sliding this slide in. And again, I used to teach this at the meetups. And I'll let you read it. I won't insult you and read it to you, okay? But again, just read the, if you watch the IBD industry group rankings, catch the moves early, identify the strongest stocks in the industry. Well, I showed you the fundamental data to use, okay, and the composite rating, which I love, okay? Right here, the majority of leading stocks generally lies from leading industries. IBD research shows that 37% of a leading stock's price movement is directly tied to the performance of the stocks industry group. Why reinvent the wheel? It's like, oh, okay, this is research from Bill O'Neill and company. Yeah, gosh, I guess he did all right, didn't he? No, he did more than all right. He did great. He's changed a lot of people's lives, including mine, and some of yours too. But down here, overall, nearly 50% of a stock's price movement or performance is linked to its industry and sector. So now we've got a couple of great foundations. Okay, let's wrap this together. And again, at MissionWinners, this is what we do. And I'm really stringent about this, folks. And again, you know why. You know my background, and some of you may have the same situation. All right. Leading groups. Focus on stocks in the top 40 or 50 groups. There's 197 industry groups. You say, I might miss one. I want to stack the deck in our favor as best as possible. And I bet you do too. All right. Leading groups. Leading stocks in those groups. No low price stocks. Okay. I prefer over $12 a share and within 20 or 30% of 52-week highs, and stocks that do at least 200,000 shares a day. And stocks that have an A or B accumulation distribution. And in the leading groups, and again, I pointed it out to you, give me stocks with a composite rating of 90 or higher. All my screens have a composite rating, a minimum composite rating of 90 or higher. That's a fact. And you can say, well, I might miss something. I come back and say from a statistical, that's easy for me to say, perspective, I'd rather use that edge and say the potential for me making money increases when I become stringent. Not too stringent, because then you'll miss opportunity. But through years of research, and folks, I've torn this stuff apart. All right. I have, and again, you know my story. 4 kids. I had to make this happen. And a wife, thank heaven, pulling these things together, looking for the best. So let's summarize this. And this, again, I can't stress how important this is. Focus on leading groups, top 40, 50 groups. There's 197 groups. You might miss something. Stack the deck. I can give you an analogy on it, okay? And I hate to use this gambling analogy, but I'm going to. You see 2 people side by side doing a roulette wheel. And the person on the left, every 3rd spin, they win and make money. The person on the right, every 10th spin, they win and make money. Where are you going to go? The wheel on the left, that every 3rd screen or every 3rd spin, or the wheel on the right, every 10th spin? I'll go to the one on the left. I want to stack the deck in my favor. And the reason we're doing this today, okay, at MissionWinners, is to speed up your learning curve on what to look for. So let's summarize something here. We focus on stocks in leading groups with great earnings and great sales within 20% of 52-week highs, no low price stocks, over $12 a share, we'll say, does it lose 200,000 shares a day, an accumulation distribution of A or B, and I hope you're writing this down, folks, all right? This will save you a lot of pain and hard work. This will make you money faster. Clean and simple basis. And here's the part I really love. We're going to take this out right now because we're done with this. Clean and simple flat bases. It's just going sideways. It's easy to see. Isn't that what you want? Watch this. You'll get a kick out of this. What is it? Oh, you always show us one from the past. This one's from today. Look at the volume pickup here, folks. This is what I was looking at yesterday. I just formed kind of a flat base here, or maybe you call it a company hill. Just a flat base and say, I guess if it takes out that line with good volume, that'd be pretty good. Oh, gee whiz, they voted on this bar right here. Volume, 152,000. This bar, 617,000 shares. There you go. It works. People talk with their mouths and vote with their pocketbooks. And we want to go where they're voting over and over. You can say, can you show me a few more examples? Sure, I'll be glad to. Here we go. TNK, clean and simple base. Look at the volume pickup. Flat base, picks up, volume coming into it. We like that. Okay, that's just really nice stuff. Can you show me some more? Now, clean and simple flat base, taking out these tops, volume surge right there. Look at the volume pickup on this bar versus this bar. It takes off right here. And it's working to the tune of 60 points without a lot of hassle. I love that. And I bet you do too. Okay. There's now Netflix, clean and simple base, max list stock, and there's a trend for you. I need to pause here and share something. Please, I'm speaking from my heart. I don't want you to think that, oh, this is Pat Walker bragging. Oh, no, we don't do that. I'm just trying to share with you what to look for. Bragging's nauseating. If we can't, I was a youth group volunteer at church for years. And my goal is this. If we can't, we're here for a reason. And I'm not getting all biblical and all that stuff, okay? Or spiritual. But we're all here for a reason. And if we can't make our lives better, but also the people around us that we love, and I'm speaking from my heart, this ain't a line. What's the use of being here? I mean, really, let's make things better. And we'll leave it
Pat.
at that. Hit me, buddy.
Yeah, second for a quick question here. It kind of relates to a couple of the charts we just looked at.
You betcha, Rich. Thank you.
Ben asked, on a breakout day, what is your recommendations for entry? Is it right in the opening, midday, VWAP? Because if it fails at the same day, where should I place a stop loss for that entry? So maybe this is Ben from YouTube. I'm not sure if he is a VIP. We're taking questions completely from YouTube today, so it could be a VIP member, or it could be somebody completely new to MissionWinners.
This is awesome. Ben, I thank you for asking this question. This is great. And by the way, team, feel free to ask questions. He or she who never asks knows either everything or nothing. And I'm not saying that in a bad way. Ask questions. I welcome them. This is on your heart. Here's why I love clean and simple bases. We'll just do net, okay? It's starting to push through here on volume. This is what I love. It lifts off. And this is something you will find, team, through experience. The best stocks, this is the honest to goodness truth, they just go. They just push away, and they push away with volume. Look for volume coming in on the daily, but as it's breaking out, look for volume. And I'm going to really get down and dirty here, folks. Look for volume as it's breaking out. Check the volume on the hourly or 30-minute, and if it's early in the morning, the 10-minute chart. I don't look at 5-minute charts. I haven't looked at a 5-minute chart this year. There's too much emotion there. It'll screw you up. Screwed me up years ago. So you see the volume coming in. And again, if it's really earlier in the morning, gosh, the market, it's been open 10 minutes, hourly chart, I'm not going to see too much. Take it down to the 10-minute really early in the morning. As the day progresses, okay, the stock's approaching the pivot, and I'm going to stop here and say something. This is the real world tactic for everybody. Don't set your price alert at the pivot. Set it early, okay? Set it, 20, 30 cents early. That way, if it triggers, you can look at it and say, that stock's starting to pick up here on lesser time frames. Yeah, boy, there's some volume coming into that thing. Those are clean and simple tops right here. I got to watch this. If this thing starts to push with volume, I'm going to buy some. By the way, did you notice how I said that? It wasn't, okay, this thing's getting really close. I got to watch this really close. Gosh, I got to get ready. I got to keep the order. No. High stress, high emotions will cloud your judgment. You've got the alert set early, not a stop, the alert. As it triggers, you can look at the stock and say, man, it's starting to approach that pivot line. There's some volume coming into that. I'm going to get an order ready keyed up to buy that baby. That really works. So I'm going to circle back here again. This is a good question, Ben. Thank you. If it's breaking out or approaching the pivot, because you've set your alert early, instantly go down to the hourly or 30-minute. And if it's early in the morning, down to 10-minute. See if there's volume coming into it. If there's volume coming into it, that's confirmation. Other people see what you see and they're buying. If you don't see volume, it means other people see what you see, or nobody saw it and they're not buying it. And we want other people acting with us. We're not big enough, each of us individually, we're not big enough to move the stock. But if we can see simple things that everybody sees, again, it increases the potential they'll buy with us. And we like that. And that power is measured by price action backed by volume. Great question, Ben. I appreciate it. Good question.
We have a couple other if you want to.
Oh, sure. Let's
look at those.
Yeah, I can ramble on about a million things, but you know what? You all, our priority is let's answer your questions. It's on your heart. Feel free to ask. Oh, and team, and this is for everybody. I say team because that's the name of the group in MissionWinners. That we are a team. We're all pushing in the same direction, which I love. Okay, we could do that in baseball or basketball or football or soccer. Okay, so yes, sir. I'll take some more questions.
Okay, so Susie, she's asking about pyramiding. She says, when buying a stock, let's say I want 100 shares and I buy 50. When would I buy the next 30 and the next 20 shares? Is it when the price progresses 2%? I'll leave that one to you. Go ahead.
That's Rich. Thank you. Susie, great question. You're exactly right. And again, this is CANSIM level 3 and 4. You'll buy if price is advancing 2 or 3% and volume's coming into it, you add on. So let's quantify this, because the percentages can be, again, that's my statistical background. Percentages can be very deceptive, all right, or confusing. So let's use simple numbers. Our goal is to own 100 shares. If it works, great. Our first purchase is 50 shares. The stock continues up a price a bit, 2 to 3%, and volume's coming into it on lesser time frames. Our next purchase is 30 shares. So we bought 50 and we bought 30. Price advances another 2 to 3%, and volume still coming into it. We buy the last 20%. 50, 30, 20, for a total of 100% the buys. That's exactly how we do it. And again, that's CANSIM level 3 and 4, and it works great. I want to flip that coin. I love these questions, by the way, folks. These are the real world questions. They're on your heart. So don't be afraid to ask. Just don't ask who my barber is. If volume is weak or price isn't pushing, you don't buy more. You started with your first position. That's beautiful. That works. What would that do for us? Well, if it doesn't work out and it fails, let's not sugarcoat it. It goes up and then it fails. You only have one starter position. Price is good above the line and bad below, and it helps you keep losses fairly small. And that helps. I'm going to say this again, though, please. No day trading, no scalping, no 5-minute charts. Please, I'm asking you, try to stay away from them. Too much emotion in those. You'll make better investing decisions. And I hope that helps. Good question. Thank you, Susie. I appreciate it. We can do some more, Rich, if you got them, buddy.
All right. So Craig asked, can you talk about your sales process? When you take profits, and what percentage are you using?
This is great. Great question, Craig. Thanks for asking. A stock breaks out and it starts to go up in price. Hopefully that's what they do, you know, I mean, and they all don't, folks. I want to share something with you. Please don't think that, oh, every stock works. No, you know who that person is the person that doesn't invest or the other person that's a liar. That happens. I'll circle back and say this. This is why Bill O'Neill talks about limiting losses. If everything that man had bought worked, he wouldn't have had to have the rule. But we know the real world. We're going to have losses, but we do things to control them. So again, if it breaks out, if it falls below the line, you sell. You sell. You have to stress, no day trading here. Please don't get wrapped up watching all these stocks in 2 and 3 and 5 minute charts. Give it a little room and let it work. Okay. But again, if it runs up and then it starts losing this line, you got to sell it. You got to sell it, not by pennies. Give it some room and let it breathe. So now let's answer this question, though. It advances in price, okay? This is a good lift right here, all right? And then it does this, and then it drops a little bit, okay? That's a pretty good move, but we're still in pretty good shape, okay? And then it runs up, and here's where it gets good. You can see it lifted off on good volume, and then it's extended again and going up. But note this bar, it closed in the bottom half of its range. This is why, team, I love price bars with open, high, low close on each bar. I don't use candlesticks. This is just me. I'm not telling you not to. But you know what I love to see? I love to see stocks that close near their highs. Now, this is just the second day, so we give it a little room. Gaps down here, but we're in good shape. And it closes near the highs. Do you see where it closed? And then it advances again. The L's is okay. On this bar, though, it advances again. But note, on this bar, right here, here's where it opens, and it runs up, and it closes in the bottom half of its range. You see the little hash mark to the right? That's where it closed. It's losing some power. Point one, looking at price. Point two, looking at the volume. Right here, how's the volume on this bar? It's less than the previous two bars. It's going up, but it's losing power. So what do? We sell some into strength. We sell some. How much? 20%, 25%. I'm asking you, please don't sell all of it. One of the things in Mission Winners I'm really big on, limit losses, don't limit profits. If you sell all of it and it keeps going, you're locked out of it. If you sell off in pieces, it does two things for you, very important. One, it guarantees you're going to make money because you're not going to let the rest of your shares turn into a loss, right? We've talked about that. You know that. Two, it's very good for us mentally, psychologically. It relieves stress. How? Because we know we're going to make money because we already did. Isn't that great? It helps us relax. This is a great quote. I probably said it on other webinars, but to me, it's not mine. I wish it was, but it's a profound quote and thought, and it's very applicable to what we do here. Only the still pool reflects the stars. Only the still pool reflects the stars. Focus on simplicity here. It will help you. It really will. We don't need to be fancy, okay? Starts to advance up. Another tail bar right here runs up to old highs. You see where it stops? Remember about 10 minutes ago, I talked about charts are a reflection of human emotions. Look at where this stops. Right back up here where it was before. Think about this. Again, psychology. It runs up here and drops like a rock. You think there are people that bought that there and didn't sell? Yeah. And then it goes all the way down here and they're just getting ripped. Okay. Then it comes all the way back up near their price and they go, thank heaven I'm near my price. I'm going to sell some. They did here, got close, and they sold some. All right. And it rallies up on decreasing volume. When it rallies back up near old highs and starts to back off, and you can see it closed in the bottom half of its daily range on a pickup in volume, you could sell some more. Sell off another 20 or 25% of your shares. That's all. Have you noticed also? I'm just looking at day charts, folks. When you're buying, you can fine tune it down to the hourly and 30-minute. But other than that, let them work. I make most of my decisions off the day charts, especially in selling. So it rallies up and we sell off a little bit more. Now we're in good shape. Now I'm going to take it a step further here because you're going to love this, okay? You can say, all right, so we've locked some profits in. We're in pretty good shape. If it keeps falling, we'll sell more. If it loses the ADMA, we'll sell more. But right now we're fine, right? There's nothing to do with it. But I already drew the line because we talked about this at Mission Winners today with the VIPs. Watch this. You'll love this. I don't know about you, but this kind of looks like a great big cup with me. Doesn't it kind of look like a big cup? It's a little loose here. Looks like a cup. And it's pulling back here. What's it? And I already drew it, okay? Because again, we talked about this with the VIPs. What's it doing? Looks like it might be forming a handle. Whoa. God, what is? Oh, a cup and a handle. I'll be darned. And that could be great. I'm not saying it's going to happen, okay? But it's starting. It's pulling back on a big decrease in volume. Not a lot of selling pressure. Perhaps it will form a handle. And then here's the setup. We always have a plan. Always have a plan. Forms a handle, and then it starts to take off on good volume. That could be an add-on buy, or it could be a new buy because it's a big up with a handle formation. Now the handle hasn't formed completely yet, so I don't want to convey that thought. All right, give it a couple of more days, and then we'll watch it. Next week, maybe that'll happen. I don't know if it will, okay? And I don't forecast that it will, but it's starting. So we'll be prepared. We always have a plan. Good questions. These are great. And again, I'll tell you why, team, because it's on your heart. It's on your heart. So good. Rich, we can take some more if you got them, buddy.
Yeah, sure. We'll do this one in a two-part. So,
oh boy,
yeah, it's not super long, but the Minaz, I think that's how you'd say his name. He says, how much of the percent of a total account does Pat invest in one particular trade or stock, I'm guessing? So you would go about what, 10% per stock usually?
Good, right. Great question. I'll put in 10 to 20% in each stock if it's really good. If it's really good, okay? And it's got to meet all the constraints that we've talked about here, both fundamentally and technically. And I need to clarify. I don't buy, let's suppose it keeps working, you get up to 20%. I don't buy an entire position at one time. And just to clarify, as I said, rules of proper investing, I'm asking you, never buy a full position at one time, because if you're wrong, the losses will be much larger. Ease into it. If your goal is to get to 100 shares, I'm repeating, but it's important to repeat these things. Your goal is to get to 100 shares. Your first purchase is 50. It continues up in price a couple percent. Your next purchase is 30 shares. It continues upwards another couple percent. Your third purchase is 20 shares. 50, 30, 20, for a total of 100 shares. If it doesn't go up in price, you only have the one purchase of 50 shares, which helps you keep losses much smaller and also control risk. Good. These are great questions. And again, lay them out there, folks. Lay them out.
Here's the second part for you. It's much harder.
Let's go,
it
buddy.
says, and what is the percent of max loss per trade does Pat usually take?
Great question. I could say through the years, and there's always outliers. You may have a gap down, okay? And I'm not going to lie to you and say I've never had a gap down. I've had a gap down before, okay? It's part of the game, okay? But I'd say my average loss is, I really have to dwell on this.
I could give you a good range that, I have a fairly sharp memory if you want.
Yeah, go ahead.
From what I've seen, max loss usually per stock is about 2 to 4%. I wouldn't say you go over that. You try to actually keep it very slim. Sometimes it's even down to 1%. But I mean, that's what do you think is about that?
I think I'm glad you volunteered. By the way, folks, we didn't rehearse this, okay? And again, this is my background. I taught Sunday school for years, to juniors and seniors in high school. And I'm gonna lie. I work really hard to keep the losses smooth. That's why I like, and by the way, that's not a line, okay? I don't want you to think like, I'm gonna lie.
Well, Cody Hill says 3% from what he's seen.
I go with that. Somewhere 2 to 3%. I keep losses very small. This is why I love clean and simple basis. Price is good above the line and bad below. Like if we bought this right here, if it starts running up and then falling below that line, I've looked at enough charts through the years. I've looked at millions of charts over the years. All right. I've seen the best ones just go. They just take off. Here, you can say, oh, that's always the past. Don't feed me that. Here you go. This is today. This broke out today. This was on the key list. I'll make it bigger so you can see. This was on the key list for buy today. And look at the clean and simple tops. And it took off. And look at the volume pickup. And watch this. Here, we'll take it down. And by the way, I didn't rehearse this. I just, we're talking what to look for and how to limit losses. No, it's good above the line, bad below. If this had run up and fallen below this line, I would have sold some off. And I'm not day trading here. I'm not playing 5-minute charts. I've done enough of this that the best ones, I hate to say the phrase again, the best ones just go. They just go with volume. And that's a good volume pickup on here. Here's the hourly chart. Look at that volume on that first bar, folks. I mean, gee whiz. I say it again. People talk. I don't know if you know this, if you can tell. I get kind of excited about this. It's fun. Look at it. You know what's neat about it? We can talk about, it's financially rewarding. To me, it's also mentally stimulating. It's really neat trying to get into your head how to do it, but also you're literally getting into other people's heads, what their thinking and thought processes are, and it's reflected in the chart. And look at this. This is the hourly chart. Look at the volume on that first bar. People talk with their mouths and vote. You think they voted? Yeah. Here, take it down to 30-minute. Right here, first bar, and then boom, off it goes. Look at the volume surge. Take it down to 10. Oh, it's just kind of going sideways. It looks like it's picking up a little bit this morning. Okay, this is 9 o'clock. The market's been open a half an hour. Stock really ain't doing too much yet. Boom, look at the volume on that bar. By the way, this ain't textbook stuff, folks. This is Pat Walker having to get it right and living off of it. Okay, this is it. And again, I didn't have any wealthy relatives. Okay, I had to get this right. And please note, does it work every time? I'll say it again. I don't want to convey that thought. Nothing works every time. But by having clean and simple base entries on the daily or lesser time frames, we have a clean and simple entry gives us a clean and simple exit for a much smaller loss. And I don't day trade and I don't scalp. Okay. You say, well, have you sold any of this yet? No, we've added to it, added more to it today. No, we'll just see where it goes. Maybe it's going to stop and this is the top. I don't know, but I do know this. If I sell it and it keeps on going, I'll be kind of ticked off. So we'll see what it does. Good question. We keep the losses very small. That'll help us. And do focus primarily on the daily chart. Look at weekly charts too. And always remember, I have to circle back to this. Focus on leading stocks in good groups, leading groups, and companies that have earnings or sales up 20 or 30% or higher, and a composite rating of 90 or higher. I'm not kidding. All right. All my screens have a minimum composite rating of 90 or higher. All of them. I might miss something. I don't care. I want to stack the deck in my favor. It's for you too. I hope it helps. We can do some more if you got them, Rich.
Oh yeah, they keep coming in. Let's see.
Isn't this exciting? This is great. This is just like eating turkey on Thanksgiving.
Syed asks, how often do you jump from a slow stock to a better performing stock?
Oh, this is a great question, Si. Thanks for asking. I'll let them work. I'll just, I'll let it go. Maybe it's going to kick in. If it's really underperforming to a degree, I'll get impatient. And here's the other important point, tying in with Si's question specifically. You own some stocks and you've got one, they're all doing okay, and you've got one that just ain't doing anything. Okay? Just isn't doing anything. I'll be correct in my grammar. Just isn't doing anything. It's just sitting there. And then all of a sudden you see a clean and simple base breakout, a good stock and a good group with great numbers and a high composite rating. Man, that baby's going on volume. Hey, you know what I'll do? I'll take the money out of the slow one and put it in the better one. Sell that and buy that. That's it. Which goes back to the other point. And this is important. I'm asking you, please don't own too many stocks. I mean, I think 10 is a good number. I prefer less than that. It's too difficult to manage them. Years ago, when I was running the money, I was managing stock accounts and I was also managing money through Fidelity. Boy, that was something else. The Fidelity funds, okay, the select funds. And so I had two things going at one time and had to watch them. I don't think you want to do that to yourself. All right. By the way, you could say, do you still do the Fidelity Select stuff? No. And that's nothing against Fidelity. It's just because of the advent of the ETFs, it's set. Now, I need to share this with you too. ETFs are a great investment vehicle. And I'll use them. I'm going to share a secret with you. Okay. You're like, Pat, I want to systematize, man. Help me with this, would you? Here's what you can do. Here's a fact for you. Leading groups produce leading stocks. Leading stocks produce leading groups. You want to dramatically improve your investing results? Every day, 2 times a day, and then at night when I'm making this key list, the first thing I do is I look at the industry sector ETFs, probably about 30 of them. You can say, God, how long does that take you? Gosh, that must take me close to a minute. All I do is just, here, we're going to do something. Tell me if this shows up. Okay, Rich? Can you see that?
Yes. You switched to bots.
Very good. Okay, thank you, sir. By the way, Rich and Owen, folks, you'd have never heard of MissionWinners if it wasn't for those two men. They are wizards doing all this stuff, and I thank both of you. You guys are great. So here's bots. You can say it's not really in a leadership position. Leave that alone. Cloud computing's picking up a little bit, okay, but not a lot of power there. There's just the leveraged Dow ETF. That doesn't look too bad. There's the non-leveraged. That doesn't look too bad. IBD 50 still kind of languishing. There's not a lot of power there. This one focuses on the max list stocks. How do I know that? Because I put it on the chart. And you can say, oh, that one's acting pretty decent. I'm not going to scan through all of them, okay? But I'll go through these and it'll tell me where there's strength and where there's weakness. And I'm going to flip the coin and show you something real quick. Financials doesn't look too bad, does it? Okay. Here's energy. In 1 second, and this is why I do this a couple of times a day, and I do it with the VIPs. In 1 second, what does that tell you? I ain't going to buy any energy stocks. Isn't that great? So what does that do? It eliminates a major portion of the universe. I don't have to look at those. Systemization really helps. I'd rather go where the odds are better for me and you making money. Here's another one for you related to that. USO. I don't see anything great there. Do you? There you go. That helps us. Now, what group has really been moving, folks? Well, the max list stocks, right? Which, when you think, oh yeah, they're technology related. Oh, gee whiz, I'll be darned. Look at what this thing's been doing. I just look at this and have been looking. I look at them every day and say, God, I better focus on some technology stocks, shouldn't I? It kind of looked like a good thing. And that's why we own a lot of technology growth stocks. The ETF was telling us, hey, that area is moving. Look at them. I encourage you to do that too. And if you want the list of the ETFs, I'll be glad to share it with you. I don't have any secrets. if it helps you, then that's a good thing. So, all right, Rich, I talked too much on that. Sorry about that, but I don't know if you know this. I'm overall very shy, so it's tough for me to talk. We can do some more if you got them, brother.
Yeah. We have let's do one last question because we're almost hitting the hour mark here, and that was.
I'm just getting started.
Well,
Rich is going, you know what? I think he's right. Okay, buddy, I'm sorry.
Let's go back over what you. Let's see. How do you determine when to trim a stock during the day, or give it room, or wait till the end of the day? So this is all about risk management, and that's pretty much, that's what we really focus on here. Cool. And so let's do that question one more time. I know you answered something very similar earlier, but that's a good one to end with.
Sure. This is awesome. Here's what I'll look for, team. And again, my background, we lived off of it. My dad was dead. I had to get this stuff right. Okay. And some of you are in the same position, but don't put yourself in a pressure cooker here. I need to stop and say something also. I'm going to go off on a tangent here. Please, I type this a lot. Please take good care of yourselves. You go, what is this about stocks? I don't give a rip about that. No, it's really important. I encourage you, eat good food, exercise. You can say, well, years ago I was registered for the Ironman. Okay, I got sick and couldn't do it. But take care of yourselves. All right. This can be a stressful career. And so watch what you eat. Okay. Really mean that. And exercise. You can say, what should I do? Just go, even if you just go for brisk walks every day, it will really, really help you physically, cardiovascular, but also mentally. Relax with it. I read this quote years ago, and I think it's in Reminiscences of a Stock Operator, where one trader's talking to another one, and one says, God, I don't know what to do. I'm losing sleep over my stocks. And the other one said, sell down to your sleep point. Sell down to your sleep point. Don't let this mess you up, okay? If you're losing sleep, you're carrying too big of a line. I know how that goes, okay? That will really help you. I know I got off on a tangent, but I just need to share this with you. You don't want to do this just for the next 6 months or year. Lord willing, you want to do this the rest of your life. So if you utilize these tactics and disciplines and risk management, it will really help you. And again, I'm speaking from my heart. That in the line. It's just laying it out. Okay, Rich, I got off on a tangent. Can you restate that question for me again, sir, please?
Yeah, we're just going over risk management, talking about when you would be trimming this, the stock down during the day, or do you give it room and wait till the end of the day? Are you doing intraday trimming, or you wait till the very end of the day?
Awesome, thank you. I do intraday trimming. I don't wait for the end of the day. And the reason why is by the end of the day, the whole gain could be gone. So if it's running up, I'll take it down to the hourly or 30-minute. And if prices, after it's made a good move, not that it's up 20 cents, I don't give a rip about 20 cents. It's made a decent move and it starts to fade. Okay, I'll look at it and say, yeah, you know what I think I do? I'm going to sell just 20%. Don't sell all of it. Remember this, limit losses, don't limit profits. Just take a little bit off, sell 20%. That guarantees a profit for you. If the rest of the shares fall to your price, your buy price, you could sell the rest for break even and you still made money. But if it keeps going up in price, you still have 80% of your shares left. And that's huge. This works. Now I'm going to share a little history lesson with you all that I bet 99% of you don't know. The uptick rule. The uptick rule. And I'm getting off on a tangent, but this is relevant to you folks. I wasn't going to talk about this, but I am now. The uptick rule. In the 1920s, you could buy stocks or you could sell stocks short. And to sell a stock short, you know what that means, but I'm going to explain it. You don't own the stock, but you think it's going to drop in price. So in the 1920s, you could sell the stock short. Sell it. You don't own it, you sell it. If it drops in price, you could buy those shares back for a profit. You sell it for 30, buy it back for 26, you made 4 points. There you go. That's what selling short is. Well, here's what happened. There were professional syndicates. Justin Livermore was involved, okay, as were others. And they could literally gang up on stocks and sell short and sell and sell and sell and keep driving them down in price, crashing them down in price. That helped precipitate the crash, the stock market crash of 1929. And most of you don't know that, but you do now, okay? You can say, well, it doesn't mean anything to me today. That was the past. Well, here's what they did. They put in what was called, it was the Securities and Exchange Act of, I think, 1933 or 34, okay, after the crash of 29. You can say, oh, this ain't relevant to me. No, it's going to be really relevant to you folks. I'm not kidding. The SEC looked at it and said, you know what? We can't let that happen. We can't have professional syndicates driving stocks down in price. We're going to put in what's called an uptick rule. What that means is if you're going to sell a stock short, there has to be somebody buy it. It has to have an uptick before you can sell short. That will help minimize these, they were called bear rates, these bear rates, okay? Well, you can say, it doesn't have squat to me to do today. Actually, it does, because I guess it was about 10 years ago, there was an uptick rule. If you're going to sell short, you had to have somebody buy it first. You've got that concept down. About 10 years ago, they eliminated the uptick rule. You go, what? I didn't know that. Sure you don't. That's what I'm telling you. What does that mean? Professional shorts can gang up on stocks faster and drive them down in price. Please know, I'm not being negative here, okay? I've known this for years. It hasn't impacted me because I know about it. But you need to know about it, that professional shorts can drive stocks down faster in price. You combine that with sellers like you and I who own a stock for a profit and we sell also. You have two groups of people selling, professional short sellers and people who own it like us, and we're selling too, which can precipitate a slightly faster price decline in the stock. What's our reaction? Now it's all going to make sense to you. That is exactly why I have the tactic of selling some into strength, because they can drop faster. And that helps me make money and lessen risk. So you got more than you bargained for on that one, okay? But it works. By the way, I said a very important word there, some. I didn't say sell it all. Limit losses. Don't limit profits. There's a quote on Wall Street that was popular for years. I said it before, I'll say it again. You'll never go broke taking a profit. Yep, that's an outright lie, folks. If your losses are bigger than your profits, you're going to go broke. What do we do at Mission Winners? By Jove, I'm telling you what we do. We'll try to let these things run. This is just a small run. We're going to try to let them work as best as we can. Meta, down here, we're going to let it work. We'll see what happens. LPG, this is just a start. But I'm going to go further here. Adobe, clean and simple base entry. We're letting it run. We've sold some into strength. We're letting it run. Amazon, entry down here. I'm not bragging here, folks. I'm trying to show you what to look for. Have sold some into strength. We're in good shape. Trending up. By the way, remember I talked about the 8-period exponential moving average? Do you see this move? That's the yellow line. This stock hasn't closed below the 8-period for this whole move. We've had one sell to lock in profits. We're okay. ANET, clean and simple flat base, sold some into strength, got wiggy around the 8, but it's trending. Folks, I'm going to say something. I do not want you to think this is like, oh, the big sales team. No, I'm trying to illustrate to you the application. Hold on one second. Hey, how are you doing? Howdy, I'm in the middle of a webinar. Right now, I'm about wrapped up with it. Can I call you back? Thanks, hon. Sorry about that. All righty, so there's Dash. Datadog, love that name. Starting there. It's just starting, okay? But every once in a while, you catch one that can make, a better move for you. And I like that. Here, this has been one of the better ones recently. Look at the clean and simple base. I mean, folks, everybody can see it. Hey, your kids could see this. Hey, mom and dad, yeah, this is just kind of going sideways. Boy, there's good volume here. Looks like some volume coming into this. Gosh, if it takes out that top, that'd be pretty good. Maybe that'd be a good buy. You could watch it. By the way, did you notice I said mom and dad? You can say, oh, that's just you're being politically correct. No, I'm not. It's been proven that women, by and large, can be better investors than men. I'm not saying that to tick the men off. I'm just laying out the facts. That's all. Kind of like me saying, I lost my hair. That's it. Don't talk about it. Just kidding. I have to share a story with you. It's really sweet. My oldest son is now married and has 4 kids. And we're going to see them today. We're all getting together for a late Thanksgiving dinner again, which I'm grateful for the grandkids. But when my oldest son was a little guy, and he was little at one time, he's now over 6'8", he looks at me, he goes, Dad, you're getting more haircuts all the time. And I just think that's genuinely sweet. It's all a joy. So here's the T and K going sideways. Want to see that lift? Okay. And there it is. There's the base. And there it is. I'm going to synthesize everything here real quick too, so we can wrap this up. Please focus on leading stocks and leading groups. It will help you dramatically. I'm speaking from my heart, folks. I'm not going to lie to you. Okay. Focus on stocks that have great earnings and are great sales and always a high composite rating. I'm not kidding. 90 or higher. It will really. That's research from Bill O'Neill and company, folks. I can document that. What a good man he was. Clean and simple basis. It will dramatically improve your investing results. And then let them work. Sell some into strength because the uptick rule that I told you about, and then try to let them work and see where it goes. Now, do you see this one right here? Then I'll stop. It's just going sideways. There it is. What would we like to see? Well, it's basic. We've sold some into strength. If this could continue base, maybe it will take out this line. And that could be either a new buy or an add-on, one or the other. It really will help you a lot. And I'll say it one more time. If you focus on stocks that are within 20% of 52-week highs with a composite rating of 90 or higher, an accumulation distribution of A or B, no low price stocks, over $10 or $12 a share, and they trade more than 200,000 shares a day. And I hope you're writing this down because this can change your life. You take those foundations, those variables, and when it breaks out, you look for a volume surge through the pivot, which it did here, and this was on the key list. There you go. There you go. And price is good above the line and bad below, which helps you control risk and keep losses small. That'll really help you. I really wanted to drive home that point for you. Okay. It makes a tremendous difference can make a tremendous difference in your life. Okay. There's the TNK. There it is. It's working. Z-scaler. Clean and simple base. These are all, you can say, are all these on your front page? Yeah, because we own them. They were all keyless stock. That's why. That's all. Just showing them. Rich, any other questions or should we wrap it up, good buddy?
We'll wrap it up there.
That sounds great. That sounds good. So team, I'm just going to synthesize everything I stated here. I hope this helps you. That's a passion of mine, is helping. I'll say it again. Focus on the leading stocks in the leading groups that have great numbers, and you will do better. And I've got to read one thing to you. Hang on just a second, Rich. I got to grab this, buddy. If I can find it in the library. This, folks, is a really good book. The Inner Game of Trading. Okay. Good quote here, and a great thought for all of you. The reason a lot of people do not recognize opportunities is because it usually goes around wearing overalls, looking like hard work. Thomas Edison. And I think that is a great, great mindset for all of us. Let's see if I can find one more. If not, we're going to wrap this out right Got to go to one last page. Have a good mindset, team. That I can't stress that enough. That will make a tremendous difference in what you do. Here we go. I want to read this and share this with you because this is important. This is on my heart, right? A great deal of talent is lost in the. This isn't too long, by the way. Okay, I don't want you to think I'm going to read a book. I'm going to read you one paragraph. A great deal of talent is lost in the world for want of a little courage. Every day sends to their graves obscure men or women whom timidity prevented from making a first effort, who, if they could have been induced to begin, would in all probability have gone to great lengths in the career of fame. The fact is that to do anything in the world worth doing, we must not stand back, shivering and thinking of the cold and danger, but jump in and scramble through as well as we can. And that's what we do. At Mission Winners, we try to give you the tools and the foundations and the mental foundations on how to take advantage of the opportunities that present themselves in the market, and naturally have a plan to get in and have a plan to get out for profits and a plan to get out to control risk. So I hope this helps you. I hope you all have had a good holiday yesterday, a good time off. Have a good weekend. Like I said, get away from all this, enjoy it, and we look forward to seeing you on Monday. And again, I thank you. And Rich and Owen, I thank you both too. Appreciate your help.
Yeah, thank you, bud. Hope everybody enjoyed the session. We're going to actually do our normal Discord live next Tuesday, but we're going to make it public on YouTube as well. So you guys can join for that. And we do have our Black Friday promo going, so you guys can check that out if you're interested in joining our VIP team. Go ahead, bud.
No, sure, we'd love to have you join the team. But again, what you got today is what the VIPs get almost every day, is education, constant with ideas and real-time buys and sells. I just to let you all know, I give real-time buy and sell alerts. All right. It's not a case of, oh, well, that's it, they're done. No, every stock that we own is on my front page with upper alerts and lower alerts set. Every one of them. Here's the beautiful part. We teach this every day. What I just shared with you, these tactics, VIPs, most of our VIPs, they don't need to get a buy or sell alert from me because they already know what to do. But they take that key list and run with it. And that's power. And I love that. I love that. So anyway, just had to share that. Yeah, Rich, thanks for everything, buddy. You really set it up here good, and I thank you so much.
All right, bud. You have a good day.
You too now. Take care. Thank you all.